time for Wave 3 Listens Live on Kentuckiana's first live local TV talk show, all hosted by John Ramsey. This is Wave 3 Listens Live.
And welcome to the work week. I hope you had a fantastic weekend. Wouldn't it be great if every day was a weekend? We have your roadmap to retirement, courtesy of Brookstone Financial. Seth Stewart is with us now, and Seth, of course, is a managing partner there at Brookstone. And Seth, I thought baseball season was over for your youngster, but no, he's an all-star, right?
Now we're into all-stars. yeah. Today actually starts the tournament over there in Clarksville, and really wishing them a lot of luck, a lot of success. And boys, I hope you guys are watching. You've done a great job all year. You've earned this opportunity. There's some of the boys right there. We had a fundraiser out at the Eastern Lanes Bowling Alley over in Clarksville over the weekend. Raised a lot of money for the team. But the first game is tonight. This actually sets the seeding for the tournament. And I'll tell you boys something, and again, hopefully you are watching. You know, I don't care if you're up by 10 points. You never let off the gas. And if you're down by 10 points, never hang your head. We're going to bring this thing home to the city of Jeff.
I love hearing that. Little inspirational speech, courtesy of Seth Stewart. Are you a good bowler, Seth?
I'm a fair bowler. I wouldn't say I'm the best by any means.
I'm pretty good when they get the bumpers out. I'm pretty good.
There you go. We'll have to go bowling one night.
Interest rate update. Yes, indeed, it does really directly apply to your retirement. Here we go. Let's talk about it. Interest rate update this week. How we looking here, Seth?
Yeah, John, pretty well stable in the interest rate environment. Rates are always, though, looking up at Brookstone Financial. We have FDIC insured money markets paying 0.80%, 3-year fixed annuities at 2%. 5-year fixed annuities at 3.15, and those 1 to 3 year maturity bonds, they pretty well speak for themselves. And I do want to reiterate that those yields that you're seeing on those bonds are actually annualized. So if you pick up a 3-year bond, you're going to earn 7.5% each and every year to maturity. Pretty good rate.
Yeah, exactly. Seth, here at Wave 3, we love companies that give back to the community. Compassionate companies. And if you have a good time, hey, that's a win-win. Yep. You've got a big golf scramble coming up, right?
We do. It's our second annual golf scramble. It's proceeds to benefit Ronald McDonald Charities of Kentuckiana. Really excited about this event. There's the dates up there. We have two events this year. Saturday, July 18th at Wooded View Golf Course out in Clarksville, Indiana. And then Saturday, August 8th at Sultan's Run Golf Course out in Jasper, Indiana. Both beautiful courses. Come out and join us. Help us raise a lot of money and awareness for a great cause. It's $300 per team. That's a 4-man scramble, and we do have a $50,000 cash prize hole-in-one contest and a lot of other great gifts and raffles available as well. There's actually a picture from last year's event, and hoping to raise more money this year again for Ronald McDonald Charities.
It'll be an exciting day on the golf course. How about that U.S. Open? That was exciting. Wow, good stuff. All right, well, let's get to today's topic. Today's topic is the 7 principles of long-term investing. Now, what was the reason for your focus on investing this week? Is this something I would think that is really important to your clients?
Well, it's kind of a general overview, 10,000-foot view. It really applies to everyone watching today, and it's the 7 principles of long-term investing success. And you know, I want you to pay close attention to this because number 1, we're going to talk about focusing on your real rate of return, because investing is about what you get to keep, John, and that's really important. And to that point, you know, we all have to be very conscious about our tax efficiency and the way we invest, because taxes can easily erode a lot of our purchasing power in the future. Much the same with inflation. The 30-year average of inflation right now is hovering somewhere around 3%, and you really have to protect your purchasing power. One of the mistakes I see people making, John, in such a low interest rate environment is tying money up for long periods of time in an interest rate vehicle paying, or a vehicle paying less than 3%. So really, in that scenario, they're really kind of going broke slow, and they don't even realize it. So be very cautious and conscious of tying your money up for long periods of time in fixed rate investments paying less than 3%.
I would think, Seth, if someone's going to meet with you, that would be one of the topics is like, okay, here's what I have. How am I doing? And you could break it down for them, right? You could say, this is what your real rate of return is. I like the term real, because some think the rate of return is one thing, but actually it may be another.
Yeah, by the time you account for taxes and inflation, you know, again, it comes back to the fact that investing is about what you keep, not what you're seeing on paper each and every year. I mean, think about an IRA, for example, or a 401k. You think all that money's yours? It's not. You have a partner in that account, Uncle Sam, because you still have all those tax dollars that are retained within that IRA or that 401k that sooner or later you're going to have to pay taxes.
So you could give them more of a, I guess, a grasp of reality and say, okay, here's what we recommend. You give them alternatives to maybe getting a higher rate of interest and less taxes, less fees.
Yeah, the net effect is we want our clients to bring home more. Because again, investing is about what you get to keep. We want them to keep more of their hard-earned returns.
All right, I like the sound of that. 7 principles of long-term investing. Let's take a look at principle number 2.
Yeah, principle number 2 is don't chase the crowd. Be very, very careful here. Build a plan and stick with it. And be careful of the hot stock tips. You know, about the time you get a hot stock tip, John and you and I were kind of laughing about this before we went on, you know, everyone else is probably selling by the time you hear that hot stock tip. But I want to go back to number 1, build a plan and stick with it. This is something that we're very adamant about at Brookstone Financial, and that is having a plan. Most people that come into our office, they come in with stacks of statements, and you know, one of the first questions I ask them is, tell me a little bit about your current financial plan. They have all this stuff. They say, well, here it is right here, Seth. I say, well, see that as the fuel that drives the plan, but that's not a true financial plan.
I see, and I would think plans vary from person to person. And it's not all about finances, is it? It's like, here's my goal. Do I have, you know, the necessary finances to achieve that goal? But I would think that changes from person to person. Everybody's different, right?
It does, and we focus a lot on goal-based planning. And one of the goals, probably first and foremost, is spendable income, retirement income. Close second to that is going to be things like healthcare expenses. You know, so we focus on goal-based planning. We take a look at all the client's assets, investable assets, and income streams, such as pensions and Social Security, and we help them arrange those assets and income streams in an effort to make them as tax efficient as possible, but still combating inflation in the future. And John, you know, when we talk about planning, it's not the world of the past where we could build a financial plan, put it in a binder, put it on the shelf, and it's good for the next 5 to 10 years. You know, the world is changing at a very rapid pace, and with the technology we use at Brookstone Financial, we can track on an ongoing basis the probability that our clients are going to hit their goals in the future, and that's powerful.
Now, when you come up with this plan, when you formulate this plan, I would think that you would want both the husband and wife present. If you are married, that's important.
That is extremely important. And I also encourage the children's involvement up to the extent that the clients want the children involved. But absolutely, husband and wife need to be there. I think that's a great idea.
All righty, interesting. Again, 7 principles of long-term investing, Brookstone Financial. Before we go to break, we're going to put the information up on the screen here. Now remember, consultations are absolutely free. Bring as much information that as you're comfortable with, right, Seth? Other than that, just make an appointment.
And we have 4 locations, Louisville, Jeffersonville, Madison, and Jasper. And we also have a free download available at brookstonefinancial.com.
All right, we've touched upon 2 of the 7 principles. We'll get to the other 5 coming up. Brookstone Financial, Seth Stewart will be right back on Wave 3 Listens, and we are live. We are talking about the principles of long-term investing, but before we go to our principles, let's talk about a reason for you to go to the website.
Yeah, John, this is an absolutely free report. There's no obligation, no strings attached. Go to the website right now at brookstonefinancial.com and download our 7 Principles of Long-Term Investing report. It's absolutely free. You got nothing to lose and everything to gain.
Yeah, you know, it's hard to get in all this information in 30 minutes, but you can sit at home in front of your computer and digest it at your own pace. Really good information. brookstonefinancial.com. All right, Seth, we've been through 2 of these principles of long-term investing. We are on principle number 3.
Yeah, and this is one of my favorite ones. Remain flexible and diversified. If you've been watching the show, you're probably, you know, I mentioned earlier, you know, I'm very conscious about people tying up their money for very long periods of time when their interest rate is not better than 3%. Buy and holds kind of become buy and hope, in my opinion. I mean, this is a new world. Now, at Brookstone, we take a little different approach, and we call that the core satellite approach. So the core investments may be more of a traditional asset allocation model, stocks and bonds, low cost. We're always conscious of fees, and those are the fees that you don't see and the fees that you do see. So think of that as your core model, your Satellite positions typically are more tactically managed, more actively managed. John, in the past we've talked about real estate investment trusts. That's an example of a satellite position. Maybe annuities, and there's other alternative asset classes which don't correlate with the overall Dow or S&P or the NASDAQ. So that's our approach at Brookstone. We call it a core satellite approach, and it's very effective, in particular in volatile markets.
You know, we talk all the time about a team of professionals, a one relationship, a team of professionals. That would be important here because it's not just one person going, okay, here's my satellite view. It's a bunch of professionals, and you're the numbers cruncher. You want proof.
I am. I mean, I love numbers. I love the bottom line. You know, you can't be all things to all people in this world. And in the financial services world and the financial planning world, there's just too much going on to really keep your hands around everything at all times. And as you mentioned, we are one relationship, a team of professionals at Brookstone. So if we get into an area, where we need assistance or another team member needs assistance, we'll pull another member of the team in that specializes in that particular area, whether it be Social Security, Medicare, general retirement planning, or alternative asset classes. So we have multiple team members.
When you say buy and hold has become buy and hope, that was a philosophy, I guess an old school philosophy. It's like, okay, you invest in something and you hold on to it and just wait for it to come around. And what you're really doing is crossing your fingers and hoping, okay, I hope this works out. I hope the timing's right for my retirement, correct?
Well, yeah. And John, let me ask you a question, and everyone at home. Do you think that the world has changed over the last 10 to 15 years?
Probably over the last hour.
Yeah, I mean, think about that. And it's primarily because technology and how fast information travels. So think at the pace in which the world has changed over the last 10 or 15 years, and that it's likely to continue to change over the next 10 to 15 years. So the rules that we applied to investing in the past may not be the same rules that we want to apply in the future. So you have to be willing to think a little bit outside the box. There's an old saying that says, different isn't always better, but better is always different. So if you want to better your results, you may have to be willing to do something just a little bit different, or you may have to be willing to work with someone different as well.
All right, interesting. All right, the 7 principles of long-term investing. Let's go to principle number 4, Seth. Here we go.
Number 4 is invest in value and opportunity. Here's what I see, John. Demographic trends create opportunity. I mean, we know that there are 10,000 baby boomers turning 65 each and every day, and that trend is going to continue for the next 15 plus years. I love defensive sectors of the market right now, driven by demand and driven by necessity. In particular, and we've talked about this in the past, the adult daycares, the assisted living centers, the nursing homes. I mean, I have clients that have had loved ones face this dilemma, and they know how expensive it is. From an investment standpoint, I see that as an opportunity that again is driven by demand and driven by necessity. So pay attention to the demographic trends that are going on right now. I mean, demographics are destiny. There's really no way around that.
You know, it's interesting because we talk often about how the cost of healthcare is going up. Well, rather than just be someone who is crushed by that or is affected in a negative way, why not take advantage? I want to be affected in a positive way and jump in and, like you said, maybe invest in some of these healthcare facilities, right?
Well, yeah, use healthcare investments to offset the rising costs of healthcare. I mean, that's one opportunity and one segment of your portfolio you need to pay attention to.
All right, makes perfect sense. All right, let's go to principle number 5 of the 7 principles of long-term investing.
Take the right amount of risk. Don't chase returns. And this really comes back to, kind of the hot stock tip of the day. Be careful about chasing returns and don't miss a critical transition. This is very, very important. And I use the analogy of climbing Mount Everest. Most of the climbers that lose their life on Mount Everest lose it on the ascent to the summit. That's the accumulation phase of life. That's when we're saving, we're contributing to 401ks and IRAs. Now, if you look at the distribution phase, that's the descent, okay? That's coming down from the summit. And again, I think earlier I said that wrong, but most climbers lose their life on the descent. Not much time is spent toward planning for distribution. Now, at Brookstone, we spend a lot of time planning toward distribution. So our job is to help you make that transition 5 years before retirement or during retirement, or maybe you're 10 or 15 years into retirement. But our job in particular, John, is to help show you how to efficiently and effectively take money out of accounts without paying unnecessary taxes and hedging yourself against inflation at the same time.
Without worry. And I would think the ultimate goal isn't the mission to have people enjoy their retirement, to get a little rest at night and feel good about it? That's the ultimate goal, right?
It is. And anytime you're in the market, you're going to see volatility. And I mean, volatility is just part of investing in the market. But the key is understanding how much volatility you can actually see without derailing your entire financial plan. And we can help you identify that. We call it the loss cushion. And by helping you identify that number, then you're making more of a business decision if the market gets volatile. It's more when it gets volatile versus a knee-jerk kind of emotional reaction and selling off and going to cash purely out of emotion.
You know, it's kind of sad. Maybe it's the DNA of Americans. It's like it's all about accumulating and listen, make money, make money. And I don't know how to distribute the money. I don't know how to take the money. And you can help and say, let's do it and keep you comfortable, right?
That's our primary focus, is focusing on distribution planning, how to effectively and efficiently take money out of your accounts.
I absolutely love that. All right, before we get to our next principle here, let's go to trivia. We've got a little bit of trivia, and it's good for some tickets, folks. We promise prizes, and once again, Brookstone Financial, that is the Thunderbird. That's a new ride, the Thunderbird at Holiday World. You can go to Holiday World and Splash and Safari, 4th of July weekend for fireworks ×2. There's Friday night fireworks, and then there's bonus fireworks. That's on Saturday, because celebrating the 4th of July is a blast at Holiday World and Splash and Safari. Celebrate the 4th all weekend at Holiday World and Splash and Safari. You can win tickets if you can answer this question.
All right, John, here's this week's trivia question. Since the U.S. Department of Labor was founded, the average annual inflation has been what percent each year? A, 2.5%, B, 2.7%, C, 3.22%, or D, 4%?
All righty, there's the question. If you think you know the answer, there's the number, 888-800-9283. It's good for passes to Holiday World and Splash and Safari. All right, coming up, we have 2 more principles remaining. And yes, we want to remind you, go to BrookstoneFinancial.com, BrookstoneFinancial.com for that free download. There it is. We'll be right back on Wave 3 Listens with Brookstone Financial. All right, we are talking about the 7 principles of long-term investing, and the man with the information is Seth Stewart. The name of the company is Brookstone Financial, and we are on principle number 6.
Yeah, John, number 6, learn from your mistakes. If you've made a mistake in the past, be very careful of making that same mistake in the future. So again, we're talking about the 7 principles of long-term investing, and these principles can pretty much apply to every viewer out there today. If you want more detailed information on these 7 principles, I encourage you to go to our website right now at BrookstoneFinancial.com and download the report. You have absolutely nothing to lose and everything to gain.
Now, when you talk about the 6th principle here, learning from your mistakes, what do you mean, like, don't compound your problem by making bigger mistakes? How could you possibly make a bigger mistake? Maybe reinvesting or making a drastic decision?
Yeah, John, here's a good example. So I've run into many individuals, you know, they bought a stock in the past and they said, oh, you know, the stock's down 15–20%, but it's going to come back. My neighbor told me it's going to come back. It may never come back. Maybe it does, maybe it doesn't. But just be careful of making those same mistakes time and time again, or being overly invested in stocks. In our 7th principle, and I know we've lost our iPad here, but I want to go on with this and talk about the seventh principle to long-term investing, and that is simply having a plan, again, and sticking with it. And at Brookstone Financial, we can really help you develop and devise a plan that can be monitored and maintained on an ongoing basis. Don't stick your head in a hole. I heard too many people in 08 and 09 when the market crashed. They said, Seth, I decided not to open my statements. I just stacked them up on the shelf. I didn't want to look at them. You know, just because the markets gets volatile doesn't mean you shouldn't be looking at your statements and be familiar with what is going on, because you need to be comfortable with what you're invested in.
Now, for folks who have not been able to write down all of these little tips here, the 7 principles of long-term investing, again, the free download, BrookstoneFinancial.com. There's other great information on there as well. So.
There is, John. We have a lot of reports, and each and every week we're going to cover some of those reports, but this one today is the 7 principles of long-term investing. It's a free download. Visit the website right now, BrookstoneFinancial.com, and download your free copy.
All right, I know we've been through all 7 of them already. Well, I think we're okay, so I was going to say bring back the iPad, but we really don't need it. We've been through all 7 of those. All righty, I think we've got time here to go for our Medicare Minute, and I'm going to let you do the introduction. This guy's got great information, and when you talk about, it's one relationship, but a team of professionals, Larry is certainly one of those professionals.
Larry is our Medicare specialist, and early on, at Brookstone Financial, we were getting a lot of questions about health care. I mean, health care is a full-time job, keeping up with the changing environment in Medicare and Medicare supplements. Mr. Larry Riff has been a huge asset to Brookstone Financial, but each and every week, Larry's going to be with us here on the show answering a question that's been submitted from a viewer, and we refer to that segment as Medicare Minutes. So we're going to turn it over to Larry Riff for our Medicare Minutes this week.
I got a good question about how does Medicare prescription drug coverage, or better known as Part D, work? Well, Medicare offers prescription drug coverage to everyone with Medicare. Even if you don't take many prescriptions now, you should consider joining a Medicare drug plan. For if you decide to join a plan later, you may have to pay a penalty if it's after your time when you're first eligible at age 65, or you don't have other credible prescription drug coverage, or you don't get help from the government. That's when you're likely to pay a late enrollment penalty if you join at a later time. The late enrollment penalty is an amount that's added to your Part D premium. You may owe a late enrollment penalty if at any time after your initial enrollment period is over and 63 days have passed since you've had that credible prescription drug coverage. So to get the Medicare prescription drug coverage, you must join a plan run by an insurance company or another private company approved by Medicare. Each plan can vary in cost and specific drugs covered, so it's best to work with a licensed insurance agent that you trust. There are two ways to get this Medicare prescription drug coverage. One is through Medicare prescription drug plans, or more often referred to as PDP plans, that add drug coverage to your original Medicare. Medicare Advantage plans like PPOs or HMOs offer drug plans in addition to Part A and Part B coverage. Medicare Advantage plans with prescription drug coverage are sometimes called MAPDs. Remember, you must have Part A and Part B to join a Medicare Advantage plan, and not all Medicare Advantage plans offer drug coverage. In either case, you must live in the service area of the Medicare drug plan that you want to join. Hey, thanks for joining me today, and have a great day.
Right. Larry Riff there, that is one of the professionals. Again, a team of professionals, one relationship. Free consultation with Larry Riff. There's the number on the screen. I think a lot of folks have liked the information that you've offered today, and every time you come in on Mondays, it's great information. They like the fact that you have an expert like Larry and many more of those. So how does someone get started with Brookstone? They've been watching, they're interested. How do they get started?
Yeah, first of all, John, they give our office a call or visit the website at brookstonefinancial.com. There's a button on the website that says, let's get started. But bring whatever you're comfortable with. I mean, that first initial meeting, there's absolutely no charge. You have no obligation. Bring whatever you're comfortable with sharing with us. I mean, the more information that someone provides with us, the better advice we can provide them. But first and foremost, that first meeting is just an opportunity to get to know each other. See where you're at. It's kind of like asking for directions, and if someone wouldn't tell you where they're at, it's hard for you to tell them how to get where they're going. So bring in what you're comfortable with. There's the website. There's the free report download. We've been talking today about the 7 principles of long-term investing. If you want to learn more about Brookstone Financial before you come in for that first consultation, the website is a great place to get started. We have a lot of information about our team and a lot of the services offered through Brookstone.
All righty, interesting stuff. And as you said, it's you said a lot of people are really surprised because it's not like we're going to try to sell you a bunch of things. Yep. It's like we want to come up with a game plan that fits what your thought process is, or your dream of a perfect retirement is.
Yeah, John, I think the general public is really tired of being sold, and we really kind of catch them off guard when they come to the office. They assume we're going to start throwing these products at them, and we focus on problem solving, not so much product sales. I mean, the products pretty well sell themselves if you focus on the problem at hand. And 2 that we talked about today in particular are the future, the anticipated rising tax rates and inflation eroding your purchasing power. So build a financial plan to address those 2 and make sure it's a plan that can easily be monitored and maintained, and that's what will help you do at Brookstone.
All right, set up that appointment with Brookstone Financial. Coming up here, we've got an answer to this trivia question. It's good for tickets to Holiday World and Splash and Safari. All of that is next, right here on Wave 3 Listens. Welcome back. Trivia question, courtesy of Brookstone Financial. All right, Seth, you give the answer. I know the winner, believe it or not.
All right. Since the U.S. Department of Labor was founded, the average annual inflation has been 3.22% each year. The answer is C.
And the winner is Sarah McCann. I know Sarah, beautiful lady. Congratulations, Sarah. Have a good time with your family at Holiday World and Splash and Safari. All right, interest rate update. This is important, folks. We do this every week, and I don't think people, sometimes it kind of slips away from you. So every week it's kind of nice to get a glimpse of it.
It is, and we're going to go back and revisit here at the end of the show. The FDIC-insured money market's paying 0.80%. I know bank or interest rates at local banks are fairly low. Check us out at Brookstone Financial. 3-year fixed annuities at 2%, 5-year fixed annuities at 3.15%, 1 to 3 year maturity bonds. I really love those 3-year maturity bonds. I see that as being the sweet spot in the bond world. Right now at Brookstone at 7.5% per year.
All right.
Great rate.
Once again, Seth Stewart, a.k.a. he is Jordan Spieth. He's the U.S. Open winner right here, folks. He's got a big golf tournament coming up, and he'd like to get you involved. What, $300 a team, that's it?
Yeah, it's $300 a 4-man team. That's a great rate, by the way, and it all goes to a good cause. There's 2 dates coming up, Wooded View, Saturday, July 18th, then out in Jasper, Indiana at Sultan's Run, Saturday, August 8th. Both of them shotgun starts. It's $300 for a 4-man team, and we actually have a $50,000 cash prize hole-in-one.
All righty, lots of information. One more reminder, though, for that free download. We've been getting calls on the free download. Go to brookstonefinancial.com. It's absolutely free. The 7 Principles of Long-Term Investing.
And John, not only that report, but if you go to the reports section of our website in the upper right-hand corner, we have a lot of great reports on the website at brookstonefinancial.com. All of them are absolutely free of charge. There's no obligation. There's a few of them right there to download any of our reports.
All righty. Once again, good luck to your baseball team, my man.
Yeah, I'm really excited, John. I mean, these boys have really worked hard to get where they're at today. And, you know, with the tournament starting today in Clarksville, hopefully the weather holds off for us, but we're really pumped. Go Jeffersonville.
All right, go Jeffersonville. We'll see you tomorrow on Wave 3 Listens. Have a good one.